Hello everyone. Well, trends don't last so long anymore. The action last week was risk aversion and the recovery of the safe haven currencies, but all that turned around yesterday and the dollar generally covered. The big winner as risk appetite came back was the Australian dollar, which was the biggest loser last week. Behind the rise was a fairly steady recovery in the Tokyo stock market Monday and this morning. The index is currently up around 2% from Monday's opening levels. Higher Tokyo stocks means higher dollar yen, means risk on. The Tokyo stock market has become much more volatile recently, which is affecting all markets around the world. I think the Japanese authorities will have no choice but to come to grips with their problems there and deal with them. They're in this too deep to back out. Having committed to large-scale quantitative easing, higher inflation, and fiscal stimulus, they have to make it work. Otherwise, their increased debt and higher interest rates will bankrupt the government. So, I expect they'll do whatever is necessary, which is the mantra of central banks nowadays, and that should support stocks and push dollar yen higher over the next several months. The alternative is just too grim to think about. This morning we have French consumer confidence, which is expected to rise by 1 point in May to 85, but that would just be random motion in the same range it's been in for some time. Later in the day in the U.S., the Case-Shiller House Price Index for March is expected to be up 10.2% year on year. That's an acceleration from February's pace. Later in the day, the Richmond and Dallas Fed's manufacturing indices are released. Both are expected to show some improvement, although if you remember, the Empire State and Philly Fed indices earlier this month both disappointed the market, so we may be in for a disappointment here too. That could push euro-dollar a little higher. On the other hand, following those indicators, the Conference Board's index of U.S. consumer confidence for May is forecast to have risen as well. And the U.S. University of Michigan Consumer Confidence Index a week or two ago rose more than expected, which boosted the dollar. So we could have a positive surprise here too, and that could counter some of the possible impact from the Fed indices. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.